Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which has tested and is currently rejecting a quite strong historical structure level for this market. In fact, this area was acting as previous resistance here, preceding all this rejection to the downside. Again, was acting as resistance here, preceding all this rejection to the downside. Again here, and now the market has broke above the zone. So all this previous resistance is now turned support here. The market has already tested it as support and has now rejected it to the upside quite aggressively. We can also notice that from a pattern standpoint, if we zoom in into the most recent price action, we can notice how, if we look at this, the pattern that has just been created here is a very clear impulse correction, an impulse pattern to the upside. Now, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market went and tested here exactly the zone in between the 0.32 and 50% retracements, which was also the previous horizontal resistance turned support, meaning that actually we had confluence of support inside of this zone, which the market in fact tested and then rejected to the upside. Because always remember that previous resistance, once it is broken to the upside, becomes support. So we had both the support from the Fibonacci levels and the horizontal support, both lining up in the same area of price, therefore creating confluence of support. Now, inside of a confluence of support area, you would expect to see more institutional longing, which would further increase the probabilities of a potential rejection to the upside. And we will be speaking about institutional longing in a few minutes when we move to the order flow. Now, let's go down on the weekly time frame and see what we have from a weekly perspective. Now, here in the weekly time frame, the situation is quite clear. We have a very similar structure and pattern that we have just identified on the monthly time frame. In fact, we can notice a clear impulse to the upside followed by the correction. Now, the market has followed through with the creation of a new higher high. Now, this is essentially an establishment of an uptrend from a weekly standpoint. And in an uptrend, you expect the market to create a series of higher highs and higher lows, so a series of impulses and corrections. And since the last move here was an impulse, what you would expect is first a correction and then a rejection to the upside. And in fact, if we go down on the daily time frame, since we have a massive impulse to the upside, the market seems overextended to the upside, so in need of a correction. So if we get a correction to here, that is then when we have the possibility of getting more potential bullish continuation. Now, before we continue deeper into what we have from a technical perspective, first, let's go and see what we have when it comes to the order flow. And by the way, I also spoke about gold quite a few times in the past. I spoke about it, in fact, when the market was here, explained all the reasons for which we could expect this rejection to the upside. Then again here, after the break and retest of the structure, when the market was here, I explained all the reasons for which we could expect a rejection to the upside. Then again, after this huge move to the upside, I spoke about gold when the market was here and explained why we could expect the creation of this higher high. And here on the retest of this previous resistance turn support, I explained all the reasons for which we could expect a potential push higher. And that is in fact exactly what the market is currently doing. And by the way, you will find all those previous analysis linked in the description, so you can go and check them out for more free education. Now, as I was saying, before we go deeper into what we have from a technical standpoint, first, let's go and see what we have when it comes to the commitment of traders. So essentially what hedge funds and the big players in the market are doing on gold. Now, what we can see here is very interesting, because if we look at the net positions, we can see how with the last few reports, net positions have started to get slightly decreased. So this shows how in the short term, also institutions are in fact expecting a correction. However, in the long run, everything is very, very bullish, going from 131.1K to 199.2K net positions. So institutions clearly have increased in the long run their longs and decreased their shorts, going from having 211K longs from an institutional perspective up to 265K, and shorts got decreased from 86.3K to 66.3K. So what we have here when it comes to the order flow is exactly what we would already expect by looking at the technicals. So a short-term correction and then more longer-term bullish continuation. So in a situation like this, if we get a correction, which is the interesting area for a potential continuation to the upside? Well, since we have an impulse, as usual, if we want to measure the correction, we will have to take our Fibonacci from the low to the high of the impulse leg. And this will give us an area of 0.3 to 50% and 0.618 Fibonacci retracements, which are lining up exactly with this previous high from which this rejection to the downside was created, which is now turned support here. So if the market here will now go and correct into this area, since this is a confluence of support zone, that is where we could expect to see more potential institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. Therefore, if we get this correction, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying the early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.